Welcome back. We're going to have our Monday news report. I have organized these so it is easier to understand. Keep this in mind. Bond market is the big market and it affects everything inside a little bit. So we're going to start off with the bond market. This is TLT. You can trade this if you want with paper money. Don't use real money. Here we are above the giant moving average, so we have support to the upside, but we are also in a pattern that we haven't broke out of yet. And usually when the bond market goes up, interest rates come down. So if we keep going higher with the support of the moving average, most likely your interest rates will come down. Here is your 2-year yield. This is usually what the Fed follows. As you can see, we finally got a rejection to the point where I can adjust the lines and draw a new pattern. We are now in this horizontal pattern and it can break either way, and we just have to wait and see where it goes. Your Fed is right here. This is your Fed. We do have the FOMC report on Wednesday. So I'm thinking most likely they're going to go flat and hold it just because they are so close to the 2-year yield. This is your 10-year yield. You threw yourself up above the giant moving average. You left a hole in your path, came down and filled it. Now you are underneath the giant moving average again. And you are also in a pattern that usually breaks to the downside. So for those of you that like less inflation, you guys can party once the lower support line gets broken. Now, usually the stock market follows yields. So when yields go up, the stock market will usually go up. If yields go down, stock market usually goes down. The only way that the stock market will actually go in the direction of the bond market is if the economic news at the time are bad. So here's your S&P 500. You guys are still coming up to retest. You guys completely filled the gap that you left coming down. Now we will see if this rotates back over and continues heading downward. You are above the giant moving average, so you still do have support to the upside. But if the TLT trade breaks to the upside and keeps going higher, then most likely your stock market will keep going down. Most likely. Now here's your Bitcoin. This is your speculative asset. Usually when the bond market goes up like crazy and interest rates come down, usually means a little bit of fear in the markets because people are taking their cash out of the stock market and throwing them into bonds, which are much safer. The first thing to usually go is your speculative assets. So assets that don't have a whole bunch of trust yet. An example of this would be crypto. Here's your Bitcoin. I said, don't break this bottom line. Well, guess what? You broke it. You can now draw a price target like so, drag it down to where it broke out at, and you can expect Bitcoin to most likely go to 79,000. And over here is a price target of a much bigger pattern that I drew out. This one goes down to like 20,000 or so, really low. Takes forever for that price target to play out, but I will just leave it there. Another speculative asset is your XRP. We can see we broke down out of the support line here. You didn't completely break the neckline of the head and shoulders pattern. This can be the next shoulder. I can't adjust my lines. I'm going to say if we get confirmation, which would be just another down candle, then I'll call this my next shoulder. And I can say we have the giant head or shoulder pattern and we are most likely to go down lower. But it is all up to it holding its position underneath this blue line. Now, usually when there's a whole bunch of market instability, your gold and silver, like hard assets, usually skyrocket. There's your gold. It's skyrocketing. You guys keep flying up. You guys should top out. This is just coming from trading experience. You guys need a pullback. You can't have runs this big for that long without a pullback. You guys need a type of pullback to reset what's called the rubber band, because markets are just like a rubber band. They can only stretch so far until they come back. And then you guys can most likely keep going higher. Here's your silver. This one just keeps on running. It doesn't care that I left holes in its path. 2 holes to be exact. One at $99, another one at 90, and there's some more down here, like at 74. There's probably more down here too. Yes, like this one here, all the way down at 43. It's left a lot of gaps in its path. So maybe this could be the top, maybe not. Can I call it right now with what I see on the chart? No. Not enough data. So you can see our bond market is trying to break to the upside, which will make yields most likely go down, and your stock market is most likely to go down just because of how the economic news are right now and because of the pattern that it broke down out of. It just needs to find resistance from it. Your physical assets should most likely keep going higher. They just need a small pullback at some point to reset. And your speculative assets, most likely they will keep going down if the bond market keeps going up. And I will see you guys Wednesday. Before you leave, make sure to like, subscribe, maybe share the video. And if you want me to analyze something, I will analyze it for you. I will see you guys Wednesday.